Even with today's slight pullback, the S&P is still up nearly 14% from the June lows. But where's it going to go from here? Well, Chartmaster Carter Worth, he joins us now to walk through those key levels. Carter, take it away.
Well, for starters, where's it going to go from here? You know, it's fair to say we're all guessing a lot of the time. But before we look at the charts, we know this. It was a mixed bag this week, right? The 5 sectors down, 6 sectors up. S&P 400 mid-cap index down, S&P 500 up. Dow Jones Industrials, transports, utilities all down, NASDAQ up. But anyway, let's look at some charts and try to figure it out. And these are all fairly short term. I thought we'd sort of be myopic today. That circle is what's known as overhead supply or congestion. That is essentially 8 to 10 days of trading from Friday, May 27th to June 8th. And then we plunged and made a new low, and we've returned to it. And we're contending with that supply. If you look at the next chart, the line drawn depicts exactly where we are in relation to that 8 to 10 days of trading. So we're dealing with it, but the question is, do we exceed it or do we back away from it? Look at the next iteration, same chart, just with more drawing. So the point is, there's a lot of symmetry here. We're at a level where moving higher would be officially a breakout above that condition, and faltering would also have, of course, major implications. Let's pull this back now and include a trend line. If and as we were to break out on the next chart, you'll see where a measured move, where we could get to. That essentially prints 4,300. Now, let's do the lines a different way. Look at the next chart. I've taken the trend line away. And is this not the same setup as we saw before in the January-March period? And what happened then? Final chart. We got to that former high and we faltered. I'm in that camp that ultimately we're going to give back a lot of this ricochet, if not all of it. It's impressive. Things like Apple up 25, 26%, the S&P up 14, but it's a bit too far, too fast. That's my conclusion.
Got it, Carter. I like it. Well, we'll see you back here in just a couple minutes for options action, so don't go too far away. But I do want to trade this for a moment here. Steve Grasso, what do you make of this? I mean, it's hard to argue against some of those charts, seeing some of those trends. Do you think we're going to have a hard time holding on to these gains or building from here?
I do. I think that we're going to have a hard time these next couple of months. Guy has been in this camp as well as I have. I think we're going to see a 4,200-ish or around there. I think today's print in the jobs numbers probably should have been more negative for the market. It wasn't. I think CPI will be positive for the market. If that's the case, I think we could hit that number that Carter just talked about, 4,300-ish, before we turn back around and have a wishy-washy month or so. I think after the midterm elections or right thereabouts, I think we should probably rally into year end, but I think it's going to be a little tough going on the way there.
Guy, well, Steve tipped his hat to you, so I'm going to let you get in here. Where do you think we're going for the rest of August?
Yeah, I agree with Steve. I agree with Carter. You know, maybe you have another 50 points or so in the S&P, and you know, to a large extent, most of this move has been somewhat predictable since the middle of June, but now I think you're at a point where you're sort of picking up quarters in the middle of a freeway, I think, if you're trying to remain bullish. And again, I agree that, listen, it's great that the job numbers was great. I'm just surprised how the market interpreted it, because I would look at it and say, you know what, it makes the Fed's job that much more difficult. And anybody that thinks this Fed is somehow pivoting, look at these numbers, and I would suggest they can't. And, you know, I have no idea what CPI is going to be, but I also know that inflation doesn't come down on a dime. It takes a long time. So more Fed, to me, Tim says it all the time, equals more volatility. I think we've seen the up move in the market. I think the next significant move is lower.